Morgan Stanley saying sell the dollars in the Goldilocks setup. Now they did this article kind of summarized a study where they looked at years and years and years of data, and when you have a Goldilocks environment where basically no recession, things are humming along, and Treasury market losses are expected to be contained, meaning that yields are likely to stay contained. You want to short the dollar. And if you're going to short the dollar, you probably most want to do it against a higher beta like long Aussie, maybe even something like long Mex. Get a nice bit of carry there as well. I think it's good to have in mind. I do have a slightly different view about the dollar, about how we are sort of going to be in this another regime kind of shift, like fundamentally. So I've got something in the pipeline for that. But good to keep in mind, and also as well as how I'm kind of thinking about what's next for the dollar and how I do see a bull case for it potentially. With a little spoiler, is to do with how looking at the weekly action. What really stands out to me is the dollar here. It's trading through the above the 1 and 3 month moving average. So it's looking like it's starting to assert itself once again. We saw the DXY chart as well. Could be breaking out comparatively. The euro, it's leaning heavy against the same moving averages. The yen, sinking below the 1 and 3 month moving averages in the last few weeks. This is as of last Friday close, by the way. So yeah, dollar yen, I think it's starting to look like it wants to just creep higher. Obviously, that depends on a lot of factors, like especially the U.S. yields. And given how I think U.S. yields could find a bottom, the 10-year could find a bottom at 4%. And I think there's a possibility that, if uncertainty clears, if Trump and Xi does meet, they iron out some issues, then the turn into the new year, we might see a little bit of acceleration in the labor market. Labor market activity pick up. And if they do, as the Fed is cutting, then all of a sudden the Fed is looking very, very wrong. And I mentioned that in my weekly, right? That I think there is a real risk that the Fed is misinterpreting the data, trying to overcompensate for this supposed labor market weakness, which is, very, very unclear. And it's just a symptom of uncertainty more than anything else. And if that uncertainty fades, and there's this sort of pent up, maybe not demand, but some intention to expand and starting new projects and finding new personnel and whatever, the labor market could really get going, right? And then also we know that international travel into the U.S. has died off, and that's been affecting the leisure and hospitality industry. But that's probably also partly to do with Trump's tariffs as well, and all his policies and making the borders tighter. Yeah, I mean, are we around that sort of that peak in uncertainty? Possibly, possibly, right? So, yeah, I think if we do get that scenario where uncertainty clears, then that would allow the 10-year yield to potentially start to recover a little bit higher to reflect decent growth and at 3% inflation. And the more growth improves as well, the more sticky inflation could be. That it might not be a 2% inflation world. It could be more like a 2.5, 3%, something on the upper end of that. So yeah, something that's definitely on my mind. Looking at the daily bars as of yesterday close, the dollar actually today has made a big move higher. It actually moved through yesterday's, Friday, and Thursday's high. When I looked at the index chart earlier, the dollar's receded a little bit now, but I do expect it to kind of stay up a little bit. No reason to expect it to completely unwind. Although today's move does seem a little bit much, given that it's mainly the yen fueling that. The yen selling, particularly via dollar yen, and that's creating dollar to kind of see a bit of strength across the board today. But I think this dollar move is a fade selectively on some crosses because we haven't really had anything fundamentally different from the U.S. side. We'll take a look at the yield charts. I can't imagine them having moved at all, or maybe they have a little bit. I don't know, but nothing really has happened, right? This morning. So that's kind of how I'm thinking about the dollar at the moment. Um, euro and pound here as well, kind of sitting a little bit heavy at the lower end of its really recent daily ranges. Yen as well, also kind of sitting a little bit heavy as well. Aussie New Zealand looks quite decent, as does the Scandies. So generally a nice risk on sort of complexion showing in the index view, looking at the daily bars.